We are on an unstable path fiscally, and we will go out of business and broke as a country on the path that we're on. The only way out of it is if AI and robotics, kind of self-serving, I get it, but probably not wrong. If AI and robotics creates so much productivity that, we're able to grow our way out of it.
Banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from downtown Dallas. Those of you from Dallas recognize we're around the Performing Arts Center, the Arts District. I'm here in town for the HousingWire Economic Summit. And HousingWire, together with Tavon, just hosted a nice dinner, kind of a group of us. Just got a chance to see all the good folks at Tavon who help people with their technology projects and find out how they're looking at AI and all the different data layers. And it's really good stuff. And then, of course, Logan Motorshami was there together with Sarah Wheeler and McKenna Clay. And I got to sit next to Barry Habib and saw Lisa and Candace. So it's a good group. And it's really nice to kind of kick off this week. Tomorrow will be the HousingWire Economic Summit. I believe it's at the George Bush Library. So anyway, I'm just knocking this video out since I'm right here in downtown Dallas, my hometown. My sister used to work in this building, if you can see it. It's that building that's got like the hole in it. I don't know if you can see that up there. She used to work above the hole in the building. And I think some guy tried to fly a plane in there one night. Anyway, okay, so looking forward to kind of catching up with some other executives that I did not see at the MBA IMB last week and getting the breakdown from all the great speakers, Barry, Logan, and it's Jobs Week. Just kidding. It's just Jobs Report on Wednesday that was supposed to go last week on Jobs Week. And so there's a little bit of fallout from that data and how it will impact mortgage interest rates in the short term. I just want to throw out a little warning that I've thrown out before. These labor reports are volatile in the short term. So, if there's a surprise to the upside and the January jobs report is actually strong, we could see rates, tick up. You could just tell the bond market isn't quite sure. Just sitting right around the Elon line at 420 on the 10-year Treasury yield. So it wants to go down if it's a weak report. It wants to go up if it's a strong report. It may just keep trending the same range if it comes in at expectation for like 50,000 jobs. So the government shutdown is over. By the way, it's a nice, beautiful church. It's still a landmark here in Dallas. And Cathedral Guadalupe. I don't know how old it is, but probably early 1900s, maybe 1800s. It's got brick, so probably 1900s. Anyway, red brick. So we could just kind of be ready, right? Like speaking of Barry Habib, they have a great tool, NBS Highway strike rate, and you can be ready to lock, as you've already discussed and set up your borrower's rates. Hey, this is what we talked about. This is the rate you want. And if I get it, because rates pop down or in that range, boom, we strike. So it's a great way to do that. But yeah, it's a very volatile market. Gary Malice, one of the 4 partners at PRMG together with me, he had his national capital markets call today. And we talked a lot about this stuff. So, we just got to get all of our originators, ready to go into spring purchase season, which really starts pretty soon. I mean, some markets start to thaw out and people will go around house hunting a little bit sooner than others. And the activity starts to pick up certainly, late February, but in some places it's pretty warm here right now. I could be in a short sleeve. It's not too bad, although it takes us to chill out here. But that seasonal weather pattern does impact purchase business, but does not necessarily impact refinance business. And so keep an eye on that and all that data. The job opening labor turnover report was interesting because there was only 6.5 million job openings. And remember, there used to be 2 job openings for every unemployed person. Now there's not even 1 job. It's like 0.9 jobs open for every unemployed worker. And I think the number was like 5.3 or 5.5 million hires in that report. So labor is definitely weakening. So that's a problem. So and the trend continues. We'll continue to see rates come down. That's it. Not a huge news week. Obviously CPI report and jobs report, but that comes later. So my Thursday night video, I'll try and get something out to you. We have our PRMG retail channel sales rally on Wednesday and the TPO channels on Thursday. So I'll try and get something Thursday night, just kind of a recap of all that stuff plus the reports. And I'll do it from a nice, interesting place. And I'm not a huge podcast person. I was able to catch up and on my work after being out last week at the IMB, at least for 3 days. And it took me about 3 days to watch it because I just don't have the time to sit down for 2 hours and 45 minutes. But Elon Musk was being interviewed by two guys for, I think they founded Stripe, it's like a payment rail system. And it was pretty fascinating. So what this guy wants to do and how he talks about AI, it's also very it's like business coaching lessons. He spends all of his time trying to address limiting factors at his businesses, multiple businesses, right? What is the limiting factor in your life, in your business, in your day-to-day task? Is it too much alcohol, too much caffeine, not enough sleep? Is it you're not disciplined, you don't make phone calls? Does your IT department slow? What's the limiting factor, right? And it was pretty interesting to hear him address limiting factors in business. And then, of course, the AI craze, right? He's going to build fabs and they're going to build data centers in space and combine SpaceX and AI. And now they're going to the moon first and then Mars later. It's pretty interesting. So, just hearing about fuel and energy in America kind of being like the limiting factor, as for the data center and AI build out. And then to hear, that, chip constraint will be a problem. Hearing about energy policy from him, like some of the fraud, waste, and abuse. He said, was talking about it was the guy totally just did a wheelie. God, I wish I would have got that for you. Talking about the fraud, waste, and abuse the Doge team went after. He thinks there's like $500 billion at least in fraud, waste, and abuse. That our money is being ripped. $500 billion. And the Social Security Administration fraud was like, it wasn't that people were ripping off necessarily the Social Security Administration for money. There were other departments that were being ripped off. And when they verify before they send the money, all they do is just verify that the person's alive. And then that department got ripped off. So it's like they pinged your database to see if you're still alive, you're dead or you're 115 years old or whatever. And by fraudulently, showing an account in Social Security Administration, there was no other checking for some of these other departments to just send the money. I mean, there's so much. It was very interesting. I don't want to harp on that, but the energy policy and the AI build out, where he thinks AI is going. The sun is we harness I believe it's billion of the sun's energy. And he said something like, if we could harness, 1/1,000,000th of the sun's energy, our GDP in theory could go up 100,000 times. I mean, it's just crazy to hear him talk about, and then he talks about the last thing I'll say that he brought up, which is related to the flow of money and rates and bonds and our mortgage interest rates. He's like, we're going broke. It's like, we're broke. We're on an unstable path fiscally, and we will go out of business and broke as a country on the path that we're on. The only way out of it is if AI and robotics, kind of self-serving, I get it, but probably not wrong. If AI and robotics creates so much productivity that, we're able to grow our way out of it. And he thinks that, when we get it artificial generative, general intelligence, AGI and wherever AI is fully baked in, human intelligence will only be 1% of the world's intelligence. That's how crazy baked in AI is going to get. I don't know. He seems to be pretty bullish on it. I am too. I'm sure Skynet's watching and listens to me, but I ain't scared. Anyway, all right. Back to my hotel. Have a good week. Get back to you on Thursday. Cheers.
Hey, it's KP coming to you live from Corona, California. And we just wrapped up 2 days of sales rallies. We had retail yesterday, 650 originators. It is the biggest event we put on. We had 2 different stages, one in Miami down in Doral, and then we went, over here on the West Coast in Corona, right here in beautiful Corona, our headquarters. And then today was the TPO channels, our correspondent channels, delegated, non-del, and wholesale. Fantastic, action-packed. I guess this is not an infomercial for PMG, but I'll just say, like, our new platform, Leo, like, I've had this shirt for 2 years. It's my dad's name, who passed 5 years ago. I'm a Leo. Loan Express originator. Pretty cool to talk about, where AI is going, where our platforms are going, and how we're able to pivot. But enough about us. No one wants to hear about me talk about my company. Let's talk about the market. It's been a volatile week, volatility. And so it was nice to have a 2-hour session today from my personal coach, Steve Scanlon at Rewire. He talked to us about metacognition. It's like thinking about your thinking, right? And neuroscience and cortisol and all the cool things. And so it's nice, to understand how we tick, and what makes us tick and how we think, and to rewire how we operate. It has been a blessing for me to work with Steve personally about once every 2 weeks, our phone call for a little over 2 years. So shout out to Lenders One for having him as a speaker. I know there's some other executives in the industry and other people that use him. And so, when it's volatile, you've got to think about how you think of things. How do you react to certain things? When motivation is a funny thing. You don't have it every day. And so then you rely back on discipline, and that's, a different kind of talking track there. But on days like today and certain waves and periods and seasons in our industry, when things seem, pretty tough, we fall back on our narratives, things we've learned, over our life. Do you have a bad or positive self-narrative? And narratives are good. So, just got to make sure you rewire what those are. And so when I talk about volatility, let's talk about the VIX, okay? VIX. It is it's a tradable ticker that you can trade on what the volatility is. And volatility has been bouncing up and down this year in the stock market. I'm not a financial advisor. I'm not responsible for your losses, only your profits. But one of the explanations, this isn't the only one, but a lot of money has flowed out of equities, or there's a rotation. Sometimes it's a broadening market. Sometimes it's a highly concentrated market. Like the top 10 stocks in the S&P 500 is like 40% of the market cap. By the way, the U.S. market cap for all of our stocks is $70 trillion. And like the next closest is China at like 11 trillion. Like the next like 5 or 6 combined don't even get to our level. And so when the stock market has sell-offs or days today where money leaves, it sometimes has a flight to safety trade. And you've always heard this old adage, stocks or bonds, stocks and bonds. Money flows out of one to the other. So it could be part of an explanation of why 10-year Treasury yield dipped down to about 410. Remember, people were calling for it to go to 480 and 460 and all this crazy stuff. The economy's stronger and jobs are going to be great. We had a blowout jobs report yesterday. It was a delayed report. It was supposed to be last Friday, the January report. And there's 130,000 jobs created. So that would normally send interest rates soaring, but it didn't. There was an initial reaction and the initial, okay, there's going to be less Fed cuts. It's definitely not cutting in the March meeting. But now it's looking like they'll cut in the April meeting. So what is going on with all this flow of money, stocks, bonds, volatility, safety trades into bonds, good 30-year bond auction today? What is going on? Rates are good. So, you don't have to know why, but like rates are in a good spot, by the way. But when you look at the stock market, where, earnings season is kind of coming to an end. And so a lot of times it's like buy on the rumor, sell on the news. And so there's still some more earnings to be done. But by and large, a lot of companies have reported and beat, by the way. I mean, earnings is a great thing to fall back on. But there's a lot of uncertainty more than 6 months out for these companies. For example, if you're a software company and you have built your business over years on this software that you pay a monthly service to, is that under attack in the future? Are you going to pay for 5, 10, 20 years worth of earnings out in the road when you don't know how AI is going to impact that stuff. I mean, you can write stuff with AI today. When I say AI, I am not talking about the free version of ChatGPT. I'm talking about the paid coding version, the professional versions where you literally tell it, I want to build an app that creates me a point of sale, and this is what I want it to do. I want you to calculate APR. I want you to show fees. You literally talk to it, and it writes code, and then it tests itself. And then it tests itself, and then it tells you, I think I've built a product. It's incredible what you can do today. And so, for example, software companies are under pressure in the stock market. So there's this rotation at a lot of these companies. Some of that money is flowing into bonds. Some of it is, you can't have BLS without BS. The Bureau of Labor Statistics puts out 130,000 jobs creation, but, they have these modeling. Well, let's do some seasonal adjustments and let's do birth death modeling. There's a lot of jobs being lost according to the household survey, but, we'll just wash right over that and get a net number of 130,000 jobs, which will be revised later when the QCEW comes out. The quarterly census of what earnings and wages or something like that. So employment wages, when all of us businesses report to the states report back to the BLS, and they go, oh, well, yeah, your jobs report the first Friday of a month isn't as high as you thought it would. So the bond market's starting to sniff that out. And remember, the bond market, they say bond traders are the smartest people on Wall Street. They always lead the Fed, okay? Not us talking about inflation, which we have a CPI report coming out tomorrow. Not us talking about job growth. Oh my gosh, 130,000, we're back. The bond market looks at stuff because they've got trillions of dollars, tens of trillions of dollars on the line every day. And so the bond market always leads the Fed. 2-year Treasury yield, it's back under 450. It's kind of hovering around that 345 resistance floor of support. It can't quite pierce through it. Will we get weaker economic data? Will inflation slow tomorrow? In aggregate, we all know the job situation is not great. And hat tip to the MBS highway crew. By the way, I had a great dinner with Barry the other night, which I mentioned on my Monday video. But something I've been saying for years about the gig economy. People work a second job or they work a gig, which has to be reported. And so. Is that starting to really take hold? Someone that loses, I think Barry mentioned like it's 86,000 or 87,000 is the median household income. If someone loses their high-paying job, why would they go take like $300 a week on a weekly jobless claims? It's not going to pay the bills, especially with inflation. Although slowing, it's still going up, just going up at a slower pace. It's expensive to live. So you take a gig that you have to report that maybe doesn't pay as much. Having said that, wages in general are still growing. They're not growing as much either, but home price appreciation generally is not outpacing wage growth. And that convergence of those two things should continue to give us a positive housing market this year. There's some great call outs by Odetta and a couple other people. Odetta from First American, Chief Deputy Economist. She had a great session at the Housing Economic Summit from HousingWire in Dallas on Tuesday. Those factors converging are good for housing. And so all these factors, they're all swirling around. There's a lot going on. I can't put my finger on every single thing, so I try and triangulate all the different things that I've heard. Having said that, in our $70 trillion equities market, market cap market in the U.S., Freddie Mac, $10.73 billion reported for the year. That's on top of that was after they did their Q4 earnings report, and then I think Fannie also put out their number. They said that they were at $28.96 billion, so $29 billion for 2025, largely unchanged from 25. Now, what's interesting is both Fannie and Freddie are loan loss reserving. They're putting more, aside for potential losses. We see the banks do that a lot. If the losses aren't as bad as the banks and Fannie and Freddie think, those loss, I guess when you bank it to the side, you reserve, they'll tend to get reversed and become profit over time. But why not do it in Q4 when you have to say what you made for the year and possibly pay taxes, right? I don't think Fannie and Freddie pay taxes. I don't know. Someone tell me down below. I don't think they do. So the other thing about the existing home sales report, which was weak seasonally in January, was on top of like one of the best existing home sales reports in December. So maybe We noticed here that a lot of our locks in December got pulled through to become a December funding, as opposed to rolling into January. So our January fundings were a little bit lighter because December was so heavy. So, we're pretty purchase heavy. So that might be what's going on there. So I don't, having a 3.91, million existing home unit, run rate, annualized run rate for January doesn't scare me for the year. It's also January. We've had some bad weather. Job data collection is tough. Weekly employment jobless claims was big last week, maybe because some people were out of work and the snowstorm and they needed some money. They couldn't even do their gig. And then that came down today. So there's all these factors going. And, I know we look at all this day-to-day stuff, but I try and zoom out a little bit and think about the big picture and how we all triangulate, quadrangulate all these data points and disseminate here with you in the audience. So again, a lot going on. The consumer price index coming out tomorrow is usually a market mover. Not as big as the jobs report, which is positive, but then bonds, even though it's positive, reacted positively. So that's not normal either. Volatility. We've got volatility, and is the AI trade with all the Mag 7 hyperscalers spending so much money? They've all announced in their earnings they're going to spend even more money on artificial intelligence, which means they're pulling away from their free cash flow, which means some analyst says, well, in the next 6 to 12 months, you're not going to make as much money or you're not going to have as much free cash flow. Therefore, I don't think your stock is worth as much. Then they maybe downgrade it or say it's a hold and not a buy or not an outperform, or maybe, you're going to cram down the price to earnings multiple. There's so much going on right now, and it is a volatile season. Having said that, the days are getting longer. There's more sunlight. Spring purchase season is just about upon us. It's Valentine's Day. Next week is President's Day. And the next 4 months in our business are usually pretty good. So hopefully you're feeling good. Your mindset is right. I'll just throw in a couple more nuggets here. There was a gentleman who did a really good job talking about builder business and at the Economic Summit. The average builder concession over time has been 3%. Today it's 10%. So, builders are trying to incent, new home buyers to move new product. And, if homes are sitting on the market a little bit longer, which the existing home sales report said that's okay. This isn't the time where they move very fast. They start to move faster as we get further into the spring purchase season and into June and July. So we'll see that come down. But remember, we also have more homes on the market, which means more existing homeowners are now listing their homes. So there's a lot going on, and we're trying to compile it all together and not trying to find bite-sized headlines that tug at your emotions, which you have to try and keep in check. And that's it. That's pretty much all I want to talk about. 13 minutes, lucky 13. Tomorrow's Friday the 13th. The original Friday the 13th was October 13th, way back when Spain murdered all these Christians on Friday the 13th. I was born on Friday the 13th, and I'm Catholic. So hopefully tomorrow's my lucky day. Anyway, have a wonderful, wonderful weekend. And for those of us with kids who are off all next week, pray for us. It's President's Week. I'll get back to you from Hawaii on Monday. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.